All right, second week of September is over officially. NVIDIA recovered most of the last week's drop that we had after reporting earnings, and it did regain its 50-day moving average last 2 days on Thursday and Friday. So today on Friday, we closed at 119. So what I'm watching from here for the stock. So there are a few things I want to mention here. Very first thing, yes, we know this is still the best performing stock in stock market year to date. Whatever the index you want to look at it, year to date gains so far 140%. Second best stock is Vistra. I think this is a utility name. And then third best stock is 76% gain. Fourth, 75% General Electric. But you get the point. So right here, right now, the picture is very clear for NVDA that we have ultra short term for the past 3-4 months of this price action. No matter how much it flushes down, we have been making lower highs so far, and unless NVIDIA at this point in time where we are heading into a very important week. First of all, September 20th is very large option expiration. A lot of people call it OpEx, monthly OpEx. So that is the big event where a lot of premiums are going to expire worthless. And in my observation for years, when it comes to option activity with large names, you can see where these lines right here, you can see these are monthly option expirations. Okay, so you can see the price action wherever it opens. I mean, especially for highly volatile cash cow stock, NVIDIA, where it closed, where it opened, where it opened, where it closed, and then right here going into this very large option expiration. It doesn't have to be identical, but you get the point. In between the option expirations, yes, you do see swings in the stock where, yes, it makes moves up and down, but eventually it closes right at wherever it opened. Same situation this month so far. If we don't see NVIDIA flushing to all the way to, let's say, 200-day moving average, which is very low probability going into the next event, which is Fed rate decision as well on Wednesday. We're going to talk about that too. But you can see somebody who doesn't trade options, they have absolutely no clue what's going on behind the curtains, where a lot of institutions, they milk the premiums. They basically, if you want to buy calls, they will sell it to you. If you want to buy puts, they will sell it to you. They will, you can see, I mean, volatility, whatever it does, just by controlling the premium buying and selling, they can pin any stock at any level. And you can see wherever it's closing, I mean, it's very, I mean, you can call it however you want, but personally, I mean, that's the nature of the markets, okay? So whoever is basically controlling the option activity and premium markets, that's where a stock is going to get pinned. You can call it rigged market, however you want to call it, but that's what it is. And you try to, so ultra short-term traders like me, I mean, you have to try to be nimble and try to make money in this situation, but at the same time, you can be seller too. You can collect premium too. But that's what has been happening. I mean, this stock has been generating cash throughout the year, last 3 years, 2 years, for funds were very liquid stock and ultra short term, 3 months, 4 months. Let's just be straightforward with it. We have a downtrend, okay? So unless we get back above 125, 130, we are still in a downtrend. We're making lower high so far, lower low, but so far right here, ultra short term, maybe we're making a little bit of a lower high, I mean higher high, higher lows. Higher lows. Unless we breach this level, we may be in a sort of ultra short term in a consolidation, maybe sort of an uptrend we have. But we have to make a new high in order to consider this move right here basically an uptrend. But last 3 months, stock is in a downtrend, especially after the split and earnings report flushed down. So if it pulls right back up to these 130, you will see, I mean, there's a lot of sellers here. There's a lot of people holding the back. Going into the FOMC, I mean, September 12th, yesterday, only 28% of people were thinking, I mean, betting that we would have 2 rate cuts. Now, look at this, going into the weekend, exactly 50-50. So market doesn't know. So if Fed surprises, whichever the decision is going to be, 25 basis points or 50 basis points, after that, we will see market volatile, okay? So in NVIDIA's case, a lot of people mention also buybacks. Buyback, in my opinion, and again, this is purely my opinion, is basically providing liquidity for anybody who wants to sell. Insiders have been dumping, and that is a liquidity. So basically, you're selling your shares to your own company. I mean, I'm referring to the CEO who has been dumping crazy, but that's what buybacks, how much they have bought back? Not much, okay? If you just pay attention to the price action, I mean, the outstanding shares of NVDA, how much has it changed for the past 5 years? It's not that significant, but it has been providing liquidity, okay, for anybody who wanted to sell. So another thing is going forward in terms of chip makers. We looked at the stock market, but if you take a look at the chip makers alone, not many chip makers are doing well. So maybe second best performing would be Broadcom, which, I mean, Apple, I mean, they supply almost like 20-30% of their revenue comes from Apple. That's the second best chip maker, actually, semiconductor stock. 50% year to date up. So not even close to NVIDIA. So if you take a look at anything else out there, so wherever the point is, wherever NVIDIA is going to go, that's where the market is going to go. We have SPY, S&P 500, almost hinting that it's going to make a new all-time high. But if you take a look at the Qs, maybe NASDAQ, let's pull up the NASDAQ chart. I'm watching for NASDAQ, basically, again, this sort of a little downtrend still. And it's all up to, for the most part, because NVIDIA technically at its market capitalization at this stage represents almost 5-6% of S&P 500. If total S&P 500 capitalization, I don't know exact number right now, 40 plus trillion, give or take, and we have 2.9 trillion NVIDIA's market cap. And another thing I wanted to mention is for this large stock to move with such a large range like this, it typically means this is a topping sign. You can talk to anybody you want, anybody who has observed the market at least for a few years, they understand whenever you see, and I have compared it last time to Tesla, and I'm sticking to that idea. Doesn't matter about their revenue, sector, cyclical, non-cyclical, I don't care. I'm just, basically, this is just my opinion again. So I was comparing it to 2021, 2022, Tesla sort of making these huge moves near its $1 trillion market capitalization moment, where it made same thing. It made these lower highs, but it has never tested that 2021 high of 414. Of course, it has done split along the way, but I'm basically, unless NVIDIA makes new high, I'm basically watching NVIDIA short term, ultra short term, in a downtrend. It can top around here. It doesn't have to flush down, but so far, ultra short term, I'm not betting against it at all. Stock is above its 5-day moving average. You can see it's moving higher above its 50-day, this yellow line. This blue line represents 20-day moving average. So basically above all of its major moving averages. And there's no reason to be here unless it breaks below 5-day moving average and doesn't hold above, let's say 115. I'm not going to be watching this name to the downside, but it can definitely finish the OpEx option expiration right around these levels above 115 all the way to 125. That would mean that OpEx to OpEx stock was flat and premium sellers milked it crazy. That's my take going forward for next week for NVDA. Thanks for watching. I will see you in the next one.